This episode is sponsored by ShoutOUT, a two-way text messaging and campaign management platform that provides analytics and facilitates conversational messaging that delivers, engages, and converts more. Send personalized campaigns from unique phone numbers to the message content itself, letting you brand your campaign to promote yourself and create your messages in a way that users are made to think you sent it personally for them. You can then monitor and improve your campaigns over time with real-time analytics. Start reducing messaging and campaign costs with cost-effective bulk SMS. Scale efficiently without having to worry about high costs. If you'd like to start using mass texting services with simple packages to choose from, visit getshoutout.com today. Hello, everyone. This is your host, Akil Jabbar, and welcome back to another episode of SaaS District. In today's episode, we'll be talking about how to use content marketing using the soft and hard power of marketing to grow your SaaS business. Today, we have our guest, Greg Elfrink, joining us. Greg has been the Director of Marketing at Empire Flippers since 2016. He joined originally as the Content Manager, and now as the Director of Marketing, he manages everything from the content to the marketing automation to vision and goal setting, all the way down to implementation. So his big goal is to make Empire Flippers more mainstream as an M&A brand and to help investors see the power of digital assets while helping sellers have life-changing exits. He grew up in Anchorage, Alaska, where he worked in the oil fields and now travels the globe networking and speaking. So welcome, Greg. Super excited to have you on the SaaS District show today.
Yeah, thanks, Akil. I'm glad to be here. Hopefully we'll be able to add some value to your audience.
Yeah, I appreciate it. So I think we chatted a little bit before the show. I'm also a petroleum engineer, so we have that. I'm from Canada. I think we were neighbors. We have that experience, but we all both shifted into the digital world. And now it's obviously been a lot of interesting trends happening in these last few years, specifically from the buyer side and the seller side. More specifically, if you can talk about, I'd love to start talking about trends, right? What are you seeing in SaaS when compared to the other models? I know you guys do a lot of content sites, a lot of FBA sites. And then, going forward from there, what do you think we can expect moving forward, going now into 2022, things like multiple valuations and the overall buyer or seller market? So a lot there, I know, but if you can,
They're multi-part questions. I'll see what I can do here.
Sure.
It's an extremely exciting time for sellers right now. Like you mentioned, I've been with EF for closing in on 6 years. April will be 6 years. And I've never seen a better time for a seller to sell. So if there's a SaaS founder out there, entrepreneur out there listening to this right now, and man, I'm tired of this thing. You've never been in a better place to sell than right now. Multiples have just gone drastically up, right? When you compare them across business models, it's quite interesting because you see, in 2020, especially, is when the real bumps began in a very significant way. I think you see that very strongly in the Amazon FBA space. Now, with SaaS businesses, those multiples have also risen as more and more investors are piling in because, for example, and I'm sure you even be familiar with this, Akil, with your own acquisition background, but commercial real estate investors during the 2020 lockdowns, COVID, rental forgiveness, all that kind of stuff, a lot of these pretty big players in private equity and real estate, they're like, whoa, we're not getting very good yield on this anymore. This is one of the safest assets as far as investments go is real estate. But at this time, it's this is not safe at all, right? We have this giant apartment building that's not making anything. So there's actually quite a lot of private equity people that sold off a large portion of their, especially commercial real estate, like strip malls, et cetera, to get into these alternative investments, such as online businesses, like SaaS businesses, right? So you're seeing an influx of competition, and that is driving up the multiples. And I do see it slowing down. Between 2020 and 2022, prices have risen dramatically. I would say we reached kind of an equilibrium point. They might bump up a little bit, but I'm not expecting another skyrocket like we did the last 2 years, barring another black swan event, of course.
Right.
Who knows what happens then?
Sure. And so maybe specifically on valuations, what are you seeing? So I remember when I first bought my content website, I think 6-7 years ago, I paid something like less than a 2-year worth of, based on cash flow valuation. Now, when we're looking at SaaS businesses, generally it's very high. It's like 5x plus, sometimes a lot higher. And generally they're also based on ARR, not, EBITDAs or SDE multiples. Are you also seeing that as well with Empire Flippers? And then how does it compare to, say, the FBA or the content sites? If you can break it down for people.
Sure. So, yes. So the MRR thing, that is one of the more interesting parts with SaaS that is really different from other business models. Almost every business is priced off a profit model, right? Your net profit. So that's how it's done with EBITDA. But with SaaS, is much more about growth and growth potential. So that's why MRR is used, of course, and ARR, right? So when a buyer is looking at buying a SaaS business, they're not. It's a different calculation than saying like, oh, I'm going to get my money back in say 5 years, right? It's more like the exponential growth actually shortens that curve dramatically with how the revenue works, the revenue model works with SaaS, right? So that's why revenue is more important with SaaS than say with Amazon FBA. Now, when it comes to the multiples, we're actually like, I'm surprised you said 5 because that actually seems kind of low.
Yeah, that was a low idea.
Yeah. We're seeing some SaaS businesses sell. Sorry, I'm going to use monthly multiples just because that's the way I was raised with EF. We use monthly multiples. So we're looking at 75, 85x. So divide that by 12, you get your annual, right? When you look at Amazon FBA, this is the crazy part, Akil. Like, so we just recently sold an Amazon FBA business for 77x. So that's like a SaaS multiple, basically, but based off of an EBITDA, not off of revenue. And the reason why that happens is because what I just mentioned, that influx of competition that is coming in. There's so much money pouring into the online business investing space in general across all business models. So that's what we're seeing with SaaS as well. And I think that's going to obviously continue to grow as more competition is hunting down for these businesses.
Right. A lot more of these funds are coming up, right? Specifically for FBA, because it seems like they're easy to manage and roll up and kind of grow and sell together. What do you that one that you mentioned that sold for 77x, what was the size of that, just for relatability?
If I remember right, I think it was $4.5 million. That might be wrong. I don't remember the specific valuation, but I think it was around that ballpark.
But okay, so slightly bigger than something doing like 100K or 200K, right?
Yeah.
Cool. And then on your side, I mean, you're an expert or very good at marketing. You started in 2016. Now, obviously, if you moved up as director of marketing, with Empire Flippers being a marketplace, I think it has very similar trends that you can do that work for SaaS founders as well. What have you seen as areas that you focused on and where you've seen the biggest results in terms of ROI, obviously increasing traffic and eventually deal flow to Empire Flippers?
Yeah, content all day, content marketing. So that's my background. That's how I got hired, and maybe I'm biased, right? But I mean, if you look at the leads that Empire Flippers gets, about I think it's 87% all comes through SEO. So our sales team doesn't do any outbound. In fact, this is the first year we're even trying outbound in a serious way. We've never done it before because we just get 100% of our leads inbound. And that works for SaaS businesses very well. The nice thing about SaaS that they have the advantage of over, say, like an e-commerce business, like an Amazon FBA business especially, is SaaS can really benefit from content marketing. There's just so much to talk about with the problem you solve with of the company you founded. And this is by far the cheapest thing that you can do. It's a pain in the butt to get started. It is a tough machine. And this is why you should do it, because most of your competitors won't do it. And if you put in the hard work, they can't compete against you. Like if someone came against EF, they wanted to start their own business, and say they raised $20 million, they would have a very uphill battle to fight because of how entrenched we are in terms of our content. Even though they're outspending us every single year, like eventually they catch up, right? But it would take them several years to compete against us with our content machine.
And so specifically content, you're saying SEO. Are you talking about on-page, doing keyword research, building out content, and trying to rank for keywords on Google, or is it a bit of guest podcasting, guest posts, getting publications everywhere, PR? Where would you say most of that comes from? Is like a couple of articles that just rank really well and bring a lot of traffic?
Yeah. So the main focus of us, and I think a SaaS founder would also have this, is our marketplace. So if you look at Empire Flippers. We at our marketplace, one of the things I did was I took each business model we sold, and when you click on the drop down on the public marketplace to say like SaaS businesses, the URL slug will change. There's a content article at the very bottom, like way below the fold, talking about selling SaaS businesses SaaS businesses for sale. And we start ranking for all of that stuff because all of our content from our blog is also acting as part of a topic cluster, moving link juice to those pages, right? So we do a lot of on-page optimization. So we use ClearScope. That I think they have like the best UI, but there's other ones out there like Surfer or Pop is also a good one for on-page. But we also use Ahrefs to see like, okay, what's the possibility of us ranking on this and all that kind of stuff. And we start building out the internal links. As far as backlinks go from external referring domains, and this is such an easy strategy for a SaaS founder to use. I highly recommend it. Like there's two ways you could build backlinks that are like super white hat. I mean, there's tons of ways, but two ways that are really common is guest posting, which of course we do a lot of that. But one of the ways I've done, so as I rose up to become the head of marketing at EF, I have way less time to write like a very well thought out article, right? So like, okay, well, how am I going to continue getting out there? Because content's my passion. I want to still produce content, right? But how can I produce backlinks for EF and going on to people's podcasts? So this right here will be a backlink, right?
Exactly.
And that gives me two backlinks, one or multiple backlinks, depending on how you distribute your show, right? With Spotify, iTunes, Stitcher, all that stuff. But and that gives me those referring domains. And you have those diminishing returns, but almost everyone that has a podcast also posts it on their website. So that's a unique referring domain I'm building right there, right? Exactly. And it works very well for me because podcasts, like what I do requires a lot of trust. Like if a SaaS founder wanted to sell with us, like, who is this EF person? And then they hear me something, like a stupid joke or something. Like, oh, I relate to this guy, right? This is a long form podcast. So it lets me build trust. This is something I would say SaaS founders should do. To me is like way more effective and way more efficient than doing cold outreach to get demos. Like I get those things on LinkedIn all the time. Like, hey man, I'll buy you, here's like $100 Amazon gift card. And to me, whenever that happens to me, I'm just instantly like, this smells desperate and you're giving me a chore. I'm way too busy to do this chore for you to get on this demo. Like I'm not even interested, like you just ruined a potential relationship with me. If you approach me with value, it's way different. So that's kind of how we do it.
I agree. Yeah, I love guest podcasting. I recommend that. Some people think, should I start a podcast? I'm like, not for the reasons you think you should. I think it's better to go on other. Yeah, it's fun. I enjoy build a network, but from an SEO and like branding, PR, I agree. Going on other podcasts, a lot easier. Yeah, more sure.
One really good strategy, and we actually use this at EF for a while, but I'll tell you why we don't in a second. But if you are a SaaS founder and you say, instead of reaching out to your ideal customer with that gift card ploy, which is super ineffective in my view and just like hurts your brand in my view, instead reach out to them. Hey, I would love for you to come onto my podcast. Like, that's true. Start a podcast about your customers, right? So if you're a project management tool, start a project productivity podcast, right? And now you have a way to do cold outreach to these people where you get to bring them on the show and you build a relationship with them for 40 minutes. You're perfect prospect. And the cool thing about this for busy founders is you can hire someone who's good on, who has a face for radio like me, right? And who is curious and is interested, but they don't even need to know that much about your niche. They just need to be curious, a good interviewer, and a good researcher. And you allow your ideal customer to train your marketer on who they are, right? And that's the reason why we don't do it anymore, because now the person who hosts our podcast is an expert because she's interviewed so many people, right? So now she knows more than most other people. So this is a great tool for our SaaS early stages to leverage content and start getting customers right away.
Yeah, and I think you mentioned, right, you haven't done any outbound yet, but I guess this is kind of a good segue if you want to get into that, where it's like, okay, we have all these people we can, like you said, maybe SaaS founders, you want to start seeing if they're looking to list. Now you can reach out to them and say, you want to jump on my podcast versus, trying to pitch them to sell their business.
Right. No one likes to be pitched, but everyone likes to talk about themselves. So give them the opportunity, right?
That's right. Yeah. That's right. Yeah, I remember the initial podcast you guys had with Joe and Justin. I don't know, is that still running? Or I remember you used to listen to that quite a bit when you guys first started.
Yeah, so it's kind of dead at the moment. We haven't posted anything there recently. Our new podcast is called The Opportunity, where we primarily interview business buyers, because I feel like that's a story that's not often told, to be honest. Everyone sees the big exit that the seller has, but no one sees the stress of the acquirer. Like, all right, making this big bet, what happens now, right?
Yeah.
So that was the original thesis of the podcast. So we do use the Empire Flippers feed every now and then. We're probably going to start using that more in 2022, because there's an audience there waiting, right? Who want more EF content. But Justin and Joe, they don't do much podcasting anymore. Every now and then they'll do something. Yeah.
Sure. Yeah. Cool. And so obviously the topic of this podcast, which we talk about, you talk about the soft and hard power of marketing to grow their business. So, SaaS founders listening in, or marketers, can you explain that further? What is that difference between them, and how they should maybe think of implementing that themselves? So you talked about content, but maybe what is the difference between the soft and the hard?
Sure. So this is something I've discovered over the years of working at EF. And one thing that we have, and a lot of SaaS founders, especially if you're an enterprise SaaS founder, you have something in common with me, which is a painfully long sales cycle. So that makes attribution just an absolute nightmare to do. Most cookies end after 90 days, and then you're also dealing with like a bajillion different points of contact, right? So I had to look at this, because our average sales cycle is like 243 days, right? It's like above 200 days. It's a very long sales cycle. The way I look at marketing is you have two things. You have soft and hard power. Now, hard power is like, let's take this podcast as an example. This podcast, the hard power is the downloads you get. That is a measurable thing that is directly tied to this podcast. Now, a soft power of this podcast is, let's say I get, off of here and my craziest dream comes true, and a person with a $20 million SaaS business wants to sell on an EF, right? And they hit me up on LinkedIn. How am I tracking that? No way. I'm not tracking that in any way, right? Not in any significantly automated way that people always love to dream about that usually doesn't exist, right? So another example of this, of hard and soft, is last year, this must have been late 2022, because it was or 2020, when Clubhouse was all the rage during the summer. I did a YouTube ad. We're talking about business valuations. And this is a pretty unique ad. People don't really do ads on this, right? So I wanted to test it out. And the hard power was all the views, the clicks, the valuation tool submits I got. But the soft power was all the people reaching out to me on Facebook and LinkedIn. Like my friends, like, hey, stop interrupting my Justin Bieber video. I'm like, oh, great, my target is on point. Right? But then I joined the Clubhouse, and I was just in this group of entrepreneurs and founders. And I was just listening in because I was trying to learn how the app works. And suddenly the moderators were like, now bringing Gregory Elfrink from Empire Flippers up on stage. I'm like, what? I don't even know these people. Like, what? Why are they bringing me up? And the guy had seen my ad. He had seen my YouTube ad. And he was like, are you real life retargeting me right now? So like, how are you going to, I moderated that entire room for an hour in front of, I think it was like 300 or 400 entrepreneurs, because of a YouTube ad I spent a few $100s on, right? But you're never going to see this in attribution. It's very rare. So that's why I call the soft and the hard power. All marketing you do has those two powers. That podcast example I gave you earlier with talking to your ideal customer, again, hard power is the download, but the real soft power is the rapport you're building with your ideal customer.
And that's the one where it's like, it's a lot harder to track until you get on the phone, talk to them, ask them, right? And that's the only way I think. We also get that where I think actually a few days ago, somebody reached out to us and filled out our form, and then we had no idea. You think it's organic because they searched us up, but then when we get on the call, he's like, "Oh no, I actually found you on this Nathan Latka video that you were on. This live video thing we did like last year, right? Like a year ago." I was like, "Okay, so you watched it and you found us," but there's no way we could attribute that until we ask him, right?
For sure, and I feel marketers with all of our tech, we get so obsessed with the attribution. But the thing is, the hard power is actually the weakest form of marketing. The real power is the soft power. That's the brand. Like that, if you're in this for the long term, the soft power over time is what can make you just a tsunami, an unstoppable brand.
And how do you, so you have this kind of, you have a marketing budget, you have marketing goals to hit, and you have somebody to report to who are going to say, we're going to measure maybe your success. let's say another director of marketing is listening in,
Sure.
based on those hard goals. But you understand that, like, okay, hold on, this is a long-term game. There's all these soft goals that you're not even thinking about, but they're only looking at this, box. How do you kind of, from a budgeting perspective and then presenting perspective or making your case, how do you show that and show the value of the both sides of the story?
Sure. This is a very good question, and there's no good answer. So the first thing I would say is, as a founder, like, if that's you, like, if you're out there listening to this and you're like, yeah, of course I'm going to hold my marketer to the fire like that, like, you shouldn't. Like, that's bad for your business. Like, understand marketing is complex. There's a lot of nuances, and there's just a lot of stuff you can't track. I mean, marketing is always going to be a bit of a black box. Now, as the director in that situation, I would, tell the founder exactly what I just said. Like, if someone looked at our Google Analytics reports, like, I would tell them, if you believe that, then you are painting a fantasy, because that's not true. That's not real. Like, which one would you rather have? Would you rather have reality or a fantasy? Because these numbers are a fantasy. So, for example, MQLs, marketing qualified leads. We built an entire MQLs revenue model. What's funny is, I am a very unorthodox marketer where I'm self-taught. I actually came up with the idea of an MQL as revenue model myself. And then I found out there was a name for it. Like, oh, I'm an idiot. I should have just Googled this, I thought it was brilliant, So like, we did this, right? We implemented it. And at first I thought it was great, but now I realize it's terrible, because if you graded our marketing on MQLs, our team is terrible. But the thing is, you're not looking at the full story. The full story is, most people that sell their business with us, they're hovering around the radius of our content. They're not just zoning in until they're ready to go. So they're actually skipping all these life cycle stages to seller submission. Now, if I was a founder looking at just that criteria, MQLs revenue, I'd be absolutely blinded to what my team is doing. And I could lose a talented team. And now my competitor is going to come up and kill me, because I just lost a star marketer because I'm listening to marketing tools that are not telling me the full story.
Right. And you have to think, exactly, so put yourself in the shoes of people who are hovering, right? Like, this isn't a thing you buy at Walmart, right? This is something life-changing decision you make over time. And it builds in your mind. It's like, okay, I built this company 3 years, now I'm ready to sell, right? So
I had a hilarious. So I did this webinar in 2021. I did a YouTube video about it. I called it my $23 million webinar, and it was all about this subject, about marketing tools lying to you and how you can't really trust them. Like, they're a good guideline, but so I did this webinar, and we get these submissions that happen, or that were watching my webinar, right? But they didn't actually come from the webinar, because I had a direct tracking link. But they were already in the process of submitting it. But because they also open up the email that is advertising the webinar in our HubSpot, HubSpot is like, oh, you influenced $23 million in revenue. Did I? No, I didn't. I got a $2 million business submitted from the webinar, but I didn't influence $23 million, because the way they're counting the influence is crazy. It's just like a person opens up an email, you influence them. Like, that's not true. They might have not even read the email they opened, right? So this is all this stuff. But this is why having a good marketer is good, because they can kind of read the bones that are being thrown, right? And tell you the real story.
I love it. And then, from there, so you have all these people coming in. If somebody's looking to sell their business, whether it's SaaS or otherwise, what is typically the process look like? I come to you, I want to understand my valuation, and you guys have a pretty good tool out there. But even before thinking of selling it, I'm a SaaS company, I come to you, what are you guys going to look at and decide if you can take it or not? Yeah.
Sure. For SaaS businesses, so I actually wouldn't recommend using our valuation tool for SaaS businesses, because it's actually set up for EBITDA valuations, right? So I would suggest just submitting your business directly, submitting your SaaS business directly if you wanted to sell with us, which is 100% for free. It doesn't cost you anything, and there's zero commitment. So it's just basically a far more detailed look at your business versus, say, using the valuation tool. But things we would be looking at is things we've kind of already talked about: MRR, ARR, your users, your CAC. Are you hitting that golden ratio, right, between CAC and revenue? All that kind of stuff. We would also look at branding, your age. And this is all part of the vetting process. Once you, and your growth, obviously, growth is a very important one for our valuation for SaaS. Once that's all done, we would give you our valuation, and we would tell you, okay, this is the typical valuation. So this is what our sales data tells us is the best to give you the maximum price for the smoothest transaction. And here's the absolute valuation, which is usually higher, but it can also be lower. Like if a founder wants to sell really, really quick, we might go below the typical. If we go higher, we always tell people like, look, this is outside of our sales data. Just expect a longer sales cycle. I'm not saying it can't happen. It's just probably going to be a longer sales cycle, right? So we're very upfront about that. There's something that really annoys me in this industry where other people, they just give these like incredibly outlandish claims like, oh, if you submit your SaaS business with me, I'm going to make all your dreams come true. And then they just whittle you down over a 6-month exclusivity.
Yeah,
so,
exactly.
Once we give you that valuation, if you're happy with it, that's when the commitment starts. And our commitment's only 2 months. If we don't sell in 2 months, you're happy, like feel free to leave it on the marketplace or take it off, whatever you want, right? And that's when our sales team and my team gets back involved to do the marketing and sales portion, negotiate, all that kind of stuff. And you probably talk to our sales side on the seller side or helping you with the exit planning to get everything ready. And once we actually get the offer signed up, the APA, usually it's an APA agreement and the APA sell. That's when we will start the migration process to actually transfer your SaaS over to that new owner. So that's the basics of how it works.
And when people come to you and you say, okay, they get excited, I'm ready to sell my business. You show them the valuation. How often is it that they say, okay, like, I don't think this is what I expected, or, is there other reasons why they decide not to move forward generally at that point?
Sure. So there's a few things that happen at that stage. This is especially true if they've never sold a business before, right. And this is like their first real business that has changed their life. And that's something called emotional equity. That's the term I've coined for it, which is basically like this business has changed your entire trajectory, right? Maybe it allows you to stay home with your family, travel the world, whatever. It's done amazing stuff for you. So because of that, we have this emotional attachment to the business that makes it more valuable in our eyes than it really is. And so we talk to our sellers about this, like to set proper expectations that, hey, look, this is fantastic. Like investors are going to love your story, but they're not going to add that to the valuation, right? Like they're valuing the business off of quarter arithmetic, off of financial forecasting, not the emotional fulfillment that you got from building and running the business, right? So that's the thing that trips people up. Another thing is just cold feet. Or they're just afraid. I mean, and it makes sense. Like this, like if you're a big SaaS founder, this is probably like 80, maybe even 90% of your net worth, right? Everything's tied to this. And it's more than just an investment. It's your life. It's your identity a lot of the time. So we actually even coach entrepreneurs to like, before they sell, like, what's your plan? Like, what's your plan with the money? Like, what are you going to do with the capital? Like, well, I'm going to retire. Like, well, what are you really going to do? Because one of the things that happens when someone sells is they get depressed because they lost their identity. Right?
Like,
their
identity.
They're happy for like 5 minutes. Yeah. Like, now what? What do I do? So these are things we help sellers with.
Right. And then on the other side, like, why are people selling their business? Because I always struggle with this, right? I mean, you look at a business, and generally when people agree to sell, you would think like, okay, if I came to you and said, hey, do you want to sell Empire Flippers? Or somebody came to me and said, hey, do you want to sell Horizon? I was like, wait, I never even thought of that because I'm continuing to build. I'm enjoying the process. But usually they're like, I'm kind of curious, if the number is right, it's the right, if this is truly life-changing and, a lot higher than I have a number in my mind, which is going to be a lot higher than what they probably have, then I'll maybe consider it. But, I have no reason to because I'm enjoying it. I'm growing it. But, if I'm putting myself on the seller side, it's like, usually it's like, okay, I'm getting tired of running this business. I'm bored, or like there's something, some kind of scary risk that's coming up with this business. And like, I need to offload this. What are some other reasons? And what have you seen on your side? Like, why are people in that position now? Okay, I want to sell this business. Yeah,
so you hit a bunch of them, and it comes down to the two main reasons why people sell. There's two categories, right? There's the personal and the business reasons. So personal is kind of like what you just said about, hey, I'm getting bored. I'm just not passionate about what I'm doing anymore. So they don't have the emotional fulfillment side anymore. And they know logically that's going to lead to their business dying probably because they're just not that interested in keeping it going, right? On the business side, and this is especially true in the SaaS world, it is a hyper competitive business model. Like at any moment, there can be a VC that's sold on a dream who just gave your brand new competitor hundreds of millions of dollars potentially, right? Depending on where you're operating. That's a huge risk factor. So if you have goals like outside of your business, say like financial goals, financial freedom, all that kind of stuff, it might make sense, even if you love the business, but you know that there are these competitors that potentially could come and compete against you, to sell that business. Because if you get 3, 4, 8 $10 million in your pocket, you can go start another SaaS business. I tell this all the time to entrepreneurs, like, don't fall in love with your business, fall in love with the business model. That will serve you so much better in the long run, because that allows you to make moves you normally wouldn't, that are probably really good moves for you to protect yourself against any kind of downside eventually, right?
So in that way, that scenario, basically offloading the risk, and then somebody else can, if they don't see that, I mean, that's kind of their loss. But yeah,
right. I mean, as somebody should tell the buyer the risk, right? If you see a risk, and I'm sure you have these conversations too, Akil. Like, this is a common fear with entrepreneurs, is this like need to de-risk. And I feel like sometimes entrepreneurs get the memo a little bit late because they're so focused on growth. And they don't realize that growth could be just as deadly as not making any money.
Exactly.
If you grow, if you scale like 10x in a year, everyone in SaaS is like, oh, this guy's a hero. But what they don't see is all the inefficiencies you scale that might be killing your business very quickly now, because now they've grown so large.
That's true. And that's something I think I shifted a lot as an investor and buyer of sites. Initially it was like, oh, look, this company's doing okay. I think I can do all this good stuff to grow it because I'm so good at marketing, whatever. I think I'm the best. And I know more about the site than the founder. Versus now is a lot more looking at, okay, yes, we're buying a company, but the opportunity is just going to be there. That's for you, and that's your thing. But first and foremost, this is a risky game. Like, you have to understand risks and manage it first and foremost. And then the opportunities on the other side is kind of a bonus, I think. And that's how I look at investments more so than I did before. So.
For sure, it's a journey. It's a journey.
Yeah, it's a journey. Yeah. Cool, Greg. So, I mean, this has been great. A lot of helpful insights, I think, for SaaS founders. Just want to do a couple of, personal, more rapid fire questions before we wrap this off. But maybe just chat a bit about your background. How did you go from, oil field, you're a roughneck on the fields and drilling. Okay, cool. And Alaska all the way, to Empire Flippers, just like, I had a similar transition, but I worked in a refinery, worked in the office, and, worked in the fields as well. So tell me about your journey.
Sure. Yeah. I was tripping pipe, putting it down into the hole, working with the welders, mixing chemicals. I wore my Darth Vader rubber suit every day for 12, 18 hours a day, 7 days a week. I hated that life. I hated to be in the oil field. It was one of those lives of quiet desperations. I knew there was this other world out there, this world, right? This online world. Ever since I was very young, because in 8th grade, I bought a AdWords course. I begged my dad like $500 to give me this course. And he's like, well, it's not drugs. Like, here you go. I lost it all. He was right. I was going to lose it all. He was absolutely correct. I had no idea what I was doing in 8th grade, right? So I've always been attracted to this because of the power that online business can do to transform your life. So I never went to college, self-taught. I failed many, many businesses, and I got cynically motivated, where I was just like depressed, like nothing's ever going to work. I need to get out of all this debt, but like from teaching myself marketing. So I started writing for less than half a cent per word for a bunch of SEOs and SaaS companies, and they loved me because I was unlike other writers, which is like herding cats. I actually gave them my work, and I was wicked cheap, and that built a huge portfolio. It gave me some confidence again, and I saw the Empire Flippers job and I was like, hey, there's a job I'm never going to get, because they always filter me out because I don't have a college degree. And I applied anyways, like, screw it. And I remember the subject line was like, we're looking for a content marketing pro. Like, that's definitely not me. Here we go. Let's get rejected. Wow. So that's how it happened. That's the short of it.
And here you are. Yeah. I know oil fields. Yeah. I mean, it's easy to get tempted to the cash, but the lifestyle is not fun at all. Yeah.
Oh, it's terrible.
Yeah.
The cash is always the worst thing to chase. It is terrible.
Yeah. For somebody, like, regardless if you have no education, I guess it's the best place to make a lot of cash in a short amount of time, right?
Yeah, some people love it. Some people love it. I remember my Derek hand. He was like, some people that come from white collar work, when they get into blue collar work, they just love working with their hands. Have you found that, Greg? Because I helped my dad with his real estate agency when I was younger. I was like, no, Glenn, I haven't found that at all. Really? I hate this. I'm cold. It's like negative 80 out. My ears are freezing.
So I would definitely don't recommend the cold, but I'm actually finding the opposite. So, after going, from that route to white collar to online, I'm actually, starting to like going back into like using my hands and like, sitting in front of a screen all day and typing. I feel like I need to build something physical. So
I actually started taking up boxing myself to like move around and like use my hands and stuff. Fantastic workout. If you've never done it, it's very deceptively hard.
Like really box or kickboxing, like actually, or boxing?
Oh, I can't kick at all. I have no flexibility. I'm working on that. It's just normal boxing.
Okay.
My trainer, he's a pro boxer, so he's always complaining to me. You need to be more flexible, Greg. Like, try it, boss.
Yeah, I sit all day. Yeah, it doesn't help. Yeah. Cool. Greg, who or what are say some of the 3 best resources that can be, books, people, mentors, or people you follow in the space who you'd say have been most instrumental to your success over these last few years?
Yeah, like business books, right?
Anything, books, people. Yeah.
So one of my favorite books, which is not business books. So one of my things that I always say, like, if you want to innovate, don't read the business section because they're all just telling you the same stuff. Go out there and find other stuff. So I read the psychology book called The Believing Brain by Michael Shermer. I believe he's a Stanford psychologist, and it's all about the concept of how belief is formed and like the various concentric circles of like accessory and core beliefs and how those change and how they interact. And that is one of the most helpful marketing books in the world, in my view. It is incredible. Another book I recommend is called Plot and Structure by James Scott Bell. So I write novels for fun as a side hobby. So I'm always interested in the business of novel writing too. So I read this book on how to write a good novel. And from a copywriting perspective, this is gold because if you can write a novel about a completely fake world and get someone interested, you're a good copywriter. You're getting people to have an emotional experience, right? So he has this system called LOCK. Your audience might know a thing called ADA, but LOCK stands for lead, objective, conflict, and knockout. So I actually teach my marketing team that system instead of ADA. Like ADA is good too, but I actually prefer LOCK. So your lead is your customer. Their objective is what are they trying to accomplish? And hopefully that uses your product. What's their conflict from stopping it? What's stopping them? And then how does your product give them the power to level up to do that knockout punch with that big victory? So it's all about their personal transformation. So I find that a really, really good book. And the final one is just Richest Man in Babylon. Fantastic story. Personal finance book, but there's a lot of good business lessons in there.
I agree. Yeah, all fantastic books. We'll link those in the show notes if people want to check that out. Greg, what does success mean to you today? Whether it's personally, business, financial, life, there's no right answer.
Sure. I've always said how I like, if I ever wanted to show my wealth, I would fly to an exotic location and sleep for as long as I want. Because to me, that is true success. Like you can just truly do what you want. I think that's the most valuable thing. Like design a lifestyle, not around things, but around experiences and what you desire. I think that's it. Like right now, I'm having a blast working at EF. I love doing this. So this is like this conversation is being part of my success, right? I want to do this. And I think some people, they build themselves traps, like seeking that growth, the endless growth, and they don't even realize what trap that they're living in. So it's good to reset every now and then to think about that, I think.
Sounds like freedom, right? You want to basically, if you want to fly anywhere, if you want to be anywhere, and if you want to sleep as long as you want to do anything you want, or nothing if you want, you get to choose that.
The ultimate flex. Like do absolutely nothing.
Do nothing. You made it in life. Good job. Awesome. Greg, what is maybe you've already talked about this. What's your favorite activity or hobby outside of work that helps you get into flow state? I know you mentioned writing, boxing. Would you say those or anything else?
Yeah. Working out is great. I need to get back into it because I've been traveling a lot during Q4. But yeah, boxing is fantastic. I do a lot of flexibility training. I think that's really like puts me in zen, like with weights and gymnastic rings and stuff like that. It's quite difficult. I really learned how unflexible I am. But then I also write. So I write fiction a lot. I write poetry a lot. If you add me on Facebook, you'll see a lot of bad poetry. And that kind of wets the whistle, so to speak, to just like, I'm a big fan of doing activities that clears the mind before you go to work. So you're kind of in that moment of zen when you approach. So those are some stuff that I do that I really enjoy. And obviously I love reading. I love storytelling, all that kind of stuff. So I'm always looking into stuff like that.
Love it. I can tell you've been great on the show. So much appreciate the stories and the showmanship.
It's working. All the books are working.
It's all paying off. Awesome. Greg, where can founders listening in, business owners, anyone who's listening, get in touch with you, learn more about you or your work, or just say hi?
Sure. Yeah. If you want to learn more about Empire Flippers, obviously empireflippers.com is fantastic. If you're a SaaS founder, again, I wouldn't recommend using the valuation tool. We're planning on doing an update for that for SaaS later this year. If you want to get a hold of me personally, I'm usually pretty easy to get a hold of. It's just greg@empireflippers.com, or you can add me on LinkedIn. I'm pretty active there. Or if you want really bad poetry, you can add me on Facebook too, I guess. If that's your thing.
Sure, lots of options for people to check out.
All right, it was a little bit something for everyone.
Exactly. Love it. Thank you so much, Greg. Much appreciated. And hopefully we can do another round other days here.
Yeah, I look forward to it.
All right, have a good one. Cheers. Thank you all for watching this episode and joining SaaS District today. Don't forget to like, subscribe, and hit the bell for future episodes where we interview top leaders in the SaaS industry. If you're a SaaS company looking to grow and unlock the true value of your business, get in touch with us at Horizon Capital, and myself or one of our consultants will provide a free assessment to help you get there and hit your goals. If you have any feedback or suggestions for this podcast, please comment down below and help us improve our content for you all. Thanks again, and see you on the next one.